This episode is presented by Interactive Brokers. Interactive Brokers is the best platform for global investors. From their one-of-a-kind market coverage to their best-in-class pricing, IBKR truly has it all. If you're serious about investing, head on over to ibkr.com. Stay tuned for more Interactive Brokers later in this episode.
Welcome to Chit Chat Stocks. On this show, hosts Ryan Henderson and Brett Schaefer analyze businesses and riff on the world of investing. As a quick reminder, Chit Chat Stocks is a CCM Media Group podcast. Anything discussed on Chit Chat Stocks by Ryan, Brett, or any other podcast guest is not formal advice or recommendation. Now please enjoy this episode.
Welcome into Chit Chat Stocks, a podcast to help you find your next great investment. Today we have Marc from Manu Invests and Fundamentally Sound. He is a writer on Substack. He has worked in finance for 10 years and now runs a nonprofit. If we want to talk about the newsletter, Fundamentally Sound covers in-depth reports, portfolio updates, trade updates, and subscriber chats, plus many other features for subscribers. For any listener who likes what Manu has to say, or Marc, excuse me, I might get that confused, what Marc has to say today. Please check out his work. The link will be in the show notes, or you can find that on Substack. And I think, honestly, I've Googled it before, and it's the first results, Fundamentally Sound or Manu Invest. So what are we talking about today? SEZL, SEZZLE, a new buy now, pay later solution that is growing like gangbusters and actually profitable. Earnings are upcoming in February. We're recording this on January 27th for any reference, for any news that comes up after this recording. But first, let's just get to the basics. Marc, how did you find Sezzle and what did they do?
Yeah, so first off, thanks, Brett, Ryan. Big fan of the show, longtime listener, first time guest. So yeah, it's an honor for me to be here. I appreciate you guys reaching out. But Sezzle really crossed my my radar because with my portfolio, I really try to anchor it in big quality compounders, but I always try and put 10% of my holdings into potential multibaggers that I think are asymmetrical opportunities. So they usually start off as 2% positions, but as the company continues to execute, I'll add to it, which has been the case with Sezzle. So it really first showed up for me. I occasionally run multi-bagger screeners, high growth, looking for profitability inflection companies, and Sezzle continued to pop up. It was also popping up when it was really at its heights last year. So it was on my radar, and as it came down, I became more interested and decided to dig in some more. And now it's a decent sized position in my portfolio.
All right, let's go through what the company does. It's buy now, pay later. People have heard of that. They go, I think if your grandma is listening at home or something like that, someone older that even was around before credit cards became popular, I'd say, well, you're buying now, you're paying later. Isn't that just a credit card? What exactly are they doing? And how does the business model from a top level overview work?
Yeah, so Sezzle is a buy now, pay later BNPL company, which essentially is a different form of credit. It targets Sezzle's prime customer is actually near prime or subprime consumers. So that's what kind of gets a little bit of the negative sentiment around it as well. But essentially, they're a different alternative credit offering to credit cards, primarily based around pay in 4, pay in 5 solutions. For cash bridges, short-term purchases. What really differentiates them is the view of the CEO is that Sezzle is really a financial well-being app, that they are giving credit-conscious consumers and consumers with higher financial literacy the ability to budget and almost reverse budget as opposed to getting stuck in the traditional high-interest credit card cycle.
So this might be sort of a basic question, but what is the general appeal of buy now, pay later as opposed to credit cards?
Yep. So credit cards have obviously been around for quite a long time. Buy now, pay later. If you, the main product is what's called pay in 4. So you put a 20% down payment at purchase, and then every 2 weeks, you make additional payments. And when you do that, they have a variety of products. They have a subscription one, but ultimately you're either paying a subscription fee for the access or you're paying a transaction fee. And in return, you have 0% interest. So as opposed to a credit card where you're accruing interest if you don't pay off the balance, if you make your payments on time and in the 4 periods, you get 0 interest on your charge.
And if you don't make your payments, you just don't have access to any more credit, essentially?
Yep. So a couple things. So Sezzle, they do lock access based off payment. So if you miss a payment, you cannot use more buy now, pay later funds. But they also have flexible repayment. So you can like push back your payment date by like a week for like a $7 charge or $15 charge. So they give you the opportunity to be flexible and avoid like the negative consequences that often come with missing a credit card payment.
Okay. Makes sense on the differences between BNPL and credit, or traditional credit, I should say. What about them is different than other BNPL providers? What makes them kind of stand out relative to trying to think of the other ones, Affirm and Klarna, I think.
Yeah, those are the big ones. And then Afterpay is like big in big Australian company. So typically buy now, pay later, the most times you'll encounter it is on like an e-commerce website. It'll say like, hey, you go to checkout and it'll say, would you like to pay in 4 or would you like to set up a payment plan with Affirm or Klarna? So traditionally, buy now, pay later is typically what's called merchant-sided. So Affirm or Klarna are creating a relationship with the merchant, with the one selling the product. And that pitch is that we are going to take a percentage of the sales because we increase your consumers by about 20%, right? So there's a trade-off. The sellers are giving away some of their margin on sales, but in return, they're seeing higher revenue from sales. So Sezzle actually kind of started that way and didn't have much success. And what they did was they pivoted to what they refer to as like a consumer-sided BNPL model, which means that their customer isn't the merchant, it's the person, it's the consumer themselves, the one who's spending the money. So they are actually working to like live in the top of the consumers' wallets. So they do have a percentage, a good range of merchant-sided agreements. So there's plenty of stores that do accept Sezzle, but they have other products, which are their main driver of profitability and high margin, which is like the big one's called Sezzle Anywhere. And what that is the consumer is paying a subscription to be able to use buy now, pay later anywhere, anywhere that Visa is accepted. So you're essentially like tapping with your phone as if it was a credit card, and it's setting up a pay in 4 payment on your phone.
Yeah, as I say, anywhere that Visa is accepted, that is pretty much anywhere.
Pretty much anywhere. Yeah.
Yeah. Let's we'll maybe talk on the Visa partnership later in the show. And I have a question about the business history, and maybe this can relate to it as leading question here. But I forgot to even look at the stock chart before we record, and I kind of see. Well, I mean, it's up 400% in the last 5 years, but there was just I don't even know what happened. It went up, I'm trying to even do some mental math here, almost 10x in a couple of months. What happened there in early 2025? And maybe how does that relate? They had this business model change. Just take us through that history along with, what happened with this stock.
So the history of Sezzle itself, so it's kind of cool. Just to touch on the CEO a little bit, it's the founder, CEO. He owns like 45% of the company. He actually, I don't know if you guys, we have like Park Boston. When we park at parking meters, there's like an app to pay. He actually developed that. Eventually, with a family member, there was a falling out. He had to go a separate way. But him and a few friends or partners started Sezzle, and they really wanted to stay in the payment space. So Sezzle originally was just like an option for online payments. They would embed similar to a firm, but they were more like a PayPal, like pay with Sezzle, lower transaction fees. And they awkwardly listed on like, it's kind of like a meme. They listed on like bong shop sites, in odd stores just to try and gain some traction. And it did not work. And they originally were listed in Australia as well. So, they thought, what should we do? They noticed Afterpay. They talk about Australia being like the mini US, like a good test market for the US. They saw Afterpay was taking off. And so they decided to switch to a pay in 4 BNPL product. They did that. They listed in Australia to raise money, and things were going well. And they almost got acquired by a company called Zip, which is another big payment processor in Australia. Things were going well, and then like 2022 hit, and the consumer tightened up, and they weren't profitable, and the merger fell apart, and they were basically burning their money, and they really had this moment of transition of what the model was. I think they laid off 45-50% of their staff. They went like ruthlessly cost cutting, and investors were pushing them to raise money, but their stock price had crashed so much they were like, we can't raise at these valuations. We have a year to become profitable. And so they ruthlessly did that. And really in like 24, 25, that profitability kind of took off. They launched Sezzle Anywhere. Their business model completely changed, and they really differentiated themselves from some of the other BNPL with their margins and their profitability. And I mean, it hit some crazy multiples. They started growing at some crazy growth rates, and the stock definitely got extended a couple months ago.
Yeah, I mean, that's what Ryan's going to share a little screen here for anyone watching the video. When this is, I think, a lesson for the listeners, when a company flips while also growing revenue at this, at a quick pace from unprofitable to, a nice little operating leverage trajectory, that can just lead to some monster returns and people making it turn into a momentum stock. But let's get back to the business. Maybe my follow-up is what would you say was the key to them actually getting profitable compared to the competition? Like what happened?
Yep. So I really like the CEO, Charlie Youakim, I think it's pronounced. He does a ton of interviews. I highly recommend people who are interested to just YouTube him. His earnings calls, I don't know if you guys have listened to any, every single one ends with a Buffett or Munger quote. So
there we go.
Nice. Good sign.
Yeah, immediately caught me with that, piqued my interest. But ever since that transition, they went ruthless cost cutting. They went ruthless efficiency, and he very much their motto and like underlying mission is for profitable growth. So he will regularly talk about on earnings calls about how there's various strategies for BNPL. One, they're different because they're 100% focused on BNPL, whereas a firm, Klarna, they also have longer term interest bearing products, but they're like truly focused on a buy, pay in 4. The other is that he'll comment and speak to other companies going the burn cash to grow our customer base route and turn them profitable later. And he essentially said, based off my past experience with business and my business philosophy, we are going to conservatively grow at a pace that maximizes profitability. And I think they've been extremely successful in doing that. And, as we talk about some of their products, maybe a little bit later, they have a unique ability to grow from within as well as they cross-sell some of their users to their higher margin products.
So you mentioned sort of the user first approach. Why, if you were a merchant, why wouldn't you accept Sezzle? Like, wouldn't you just kind of want to be accepting to all BNPL providers just based on whatever the users like, or are there like exclusive deals? Like, why do merchants make a preference if they do?
Yeah. So I think Sezzle did get a big deal with Target at one point. They do have a pretty good base, but I believe there is exclusivity agreements. And Sezzle's smaller compared to some of the other players. I think that some of them have the ability and are willing to burn cash to grow user base and access. And, if you're a merchant and you're debating between, Klarna or Affirm and Sezzle, Sezzle's like monthly active users, they have a stricter definition of what a user is as opposed to the other BNPLs, but it's much smaller because they're not focused solely on user growth, and they're focused more on building their premium products with subscribers with long lifetime value. So if you're a merchant and Klarna says we have X amount and Sezzle has 1/5 of that, I think merchants may tend to lean towards the higher user base.
Makes sense. Does the Sezzle Anywhere circumvent that? Like, it sounds like if you have a Visa card and pretty much everyone accepts a Visa card, it's sort of a workaround, but ultimately you're still using Sezzle.
Yeah, so that's exactly what it is. So the merchant doesn't even know you're using Sezzle, right? So they issue you a digital Visa card that is tied to your Sezzle account, BNPL. So can be used anywhere. You pay a subscription to get access to that. And they do have another product called Sezzle On Demand, which is similar. It essentially allows you to go up to the counter, say, I want to buy this using Pay in 4 with Sezzle. Even if they don't accept Sezzle, you can do like a one-time, essentially Sezzle Anywhere type of transaction for a fee. And Sezzle also uses that to approach merchants and say, listen, 20% of our shoppers are coming here. Would you consider embedding us as a provider?
Okay, I want to talk about the state of the BNPL industry as a whole. It was something that in the 2020-2021 hype cycle, it was one of the industries that was definitely hyped up. We saw a lot of takes out there that it was going to disrupt the entire credit card industry, the entire current payments network. And then people just stopped talking about it for many years. We've seen a little bit of resurgence with some of these companies growing and now getting profitability, Sezzle included. But how is the overall industry grown? Because I would say I'm someone that totally forgets about this market at all. But it seems like, I mean, correct me if I'm wrong, it actually keeps taking market share.
If you're a regular listener to Chit Chat Stocks, then you've probably heard us talk about Interactive Brokers. Here are 3 reasons why we think Interactive Brokers is better than any other brokerage platform. Number 1, they've got it all. Stocks, bonds, ETFs, options, crypto, you name it, 170 markets, 36 countries, 28 currencies. Number 2, they've got best-in-class pricing. They have 0 commissions on U.S.-listed stocks and ETFs and offer margin rates up to 54% lower than the industry. Number 3, you can ditch the separate high-yield cash account. Interactive Brokers offers up to 3.14% interest on instantly available cash held in your investment account. Head on over to ibkr.com. Rates subject to change. Margin involves risk. Restrictions apply. Interactive Brokers is a member of SIPC.
Yeah, so BNPL has grown, as of like 2023, there was like 45 billion in originations. And in like 2019, it was 3 billion. So, and expectations for this year are to be close to 600 billion. Users have almost tripled in that time period. And I think Morgan Stanley was the one with the report, but they essentially are estimating that BNPL could get 900 billion, close to $1 trillion by 2030. So that's like a 10% growth CAGR. It was very rapid the last few years. It is starting to slow down, but it's still maintaining like a 10% growth CAGR. And there's a lot of room to grow. I think like 75% of Americans use credit cards, but it's still only like 15% of Americans use BNPL. Up until I became I got Sezzle as an investor to just try it. But up until that point, like I've never used BNPL. And you know, if Sezzle, so I think some of the change in sentiment also has been that over the past year or so in particular, there's been a lot more like subprime negative headlines with some of the auto lenders and student loan defaults. And I think BNPL probably has a little to do with like the credit card industry as well, is being lumped into that, right? It's being talked about like it's risk taking, it's extra debt. I think very differently of that. You know, I'm happy to give you my take on BNPL overall, but I don't want to jump any questions if you got something else you want to go down.
No, let's do it. Personal experience. What do you think?
All right. So me personally, particularly with Sezzle, I think a properly run BNPL is way more consumer centric, consumer friendly, and ethical than traditional credit cards. And like I see headlines that are like, BNPL is used to buy groceries now. Or I see like X posts that are like, I saw someone at Chipotle using BNPL and I wanted to go up and swipe my card to buy their meal for them. Like, it's so sad that people are leaning on BNPL. When the reality is, if you polled me, I use 100% of my transactions are on credit cards. You know, I do it for travel rewards, and for like fraud protection and all that, I pay it off weekly. But 100% of my transactions are, by definition, buy now, pay later, right? People talk about credit cards as if they're not buy now, pay later. A credit card is the strictest definition of buy now, pay later. And, you know, I think, you know, anything new always catches flack, right? You know, my mom will say to me like, "Oh, you're not using BNPL, are you?" Like my wallet's not full of credit cards. But the reality is that the fastest growing segment of BNPL is young people, and Sezzle in particular often serves people who like don't have traditional FICO score history and stuff like that, right? So it's a little more flexible for them. They have an opt-in where you can build credit and report to FICO if you'd like. So it's a tool like that. But the reality is, I'm a much bigger fan of giving someone the ability to reverse budget than I am of giving someone a revolving credit line, right? So full disclosure, I'm a person in recovery from addiction, and you know, I just celebrated 10 years. My life's amazing today. But I was handed a Discover card in college. My mom encouraged me to get it, right? And it had a $3,500 balance. And I bought a lot of stuff and did not pay later, right? So even as an irresponsible young adult, I wasn't great with credit. Add in the circumstances of my life, and credit became a revolving trap for me. It was minimum payments, maxing out credit lines. And there are times where I'd call Discover and I'd say, "Hey, I had an emergency. My car broke down. I'm maxed out. Can I have a $500 increase?" And rather than a $500 increase, they gave me a $5,000 increase, right? Because the reality is, I was their ideal customer, living with maximum limits, stuck paying a minimum balance over and over as interest accrued, right? So as like a dad today, if I fast forward my kids to when they're 18, I'm much more comfortable being like, "Hey, if you want to build your credit, here's Sezzle," right? You have the ability to report to FICO. You have the ability to buy now, pay later. but you have to do it in a responsible way. Your access gets cut off if you don't make a payment. You can't exceed a certain limit, and you have to pay it off in 4 payments. And when you do, they increase your limit a little bit, right? So while I prefer everyone to only buy what they afford, that's not how America functions. But in my opinion, there's all this talk about credit card interest limits and all that, right? I have the ability to buy something now that I want to pay for later with 0% interest in a responsible and managed way with a product like Sezzle, where a credit card gives me the ability, because life happens, but it gives me the ability to defer it to next payment cycle and to pay 27% interest on it. So in my opinion, the whole sentiment is kind of skewed a little bit, and people are just used to what they're used to. And when anything new shows up, and when those crazy kids are using something that they're not familiar with, it automatically gets a negative sentiment.
Yeah, it is funny how credit card users look at BNPL like it's this bearish signal. Like, look how many people are using credit that shouldn't be using it, when in reality, credit cards are like far more predatory.
Far more.
BNPL cuts you off.
Yeah.
You don't make a payment, they cut you off. They don't say, let's up those limits. Now's the time to really up the limits. Yeah.
Pay us $25 minimum payment and you're good.
Yeah. Yeah, I think you're right, and I agree. Let's maybe talk through the income statement a bit, because it's sort of a newer business model. Some people might not be familiar with kind of how the economics work here. So how are they? Give us some of the numbers, but also, how does a company like this grow? Is it like just pure marketing to customers? Is getting integrated with merchants like a form of marketing as well? And just, I guess that's kind of a lot to throw at you, but
Yep.
Growth and income statement.
Yeah. So their income statement, their top line revenue is growing at like 70%. They have 60% gross margins, a little higher. Their net income margins are like 28, 29%. They're free cash flow positive. That also stands out against a lot of the other BNPLs, which is a nice little position to be in, because they can self-fund a lot of the growth. They have like 33% adjusted EBITDA margins. And, just looking at their net income, right? I think Affirm is negative, and Klarna is about half of what Sezzle is. It might be flipped, but that's the reality. And so the way Sezzle grows their revenues, it starts at GMP, which is gross merchandise value. So the more people spend, either way, they get transaction fees. They get a percentage of the Visa charges, of the network charges paid back. So GMV increases. Good. They have like an 11-12% current take rate. And then what comes out of that, primarily, their cost of revenue, which is primarily because, at this point with their operating leverage, their tech is already built, all that, is primarily like provision for credit losses. So last quarter, that was like 3.1 or 3.2%, which was a little spike and was probably responsible for a little of the drop in the stock price. But pulling that out, so for every $10 they take, they're paying $3 some odd dollars in provisions plus additional costs, and they end up with a 60% gross margin. So they grow through, expanding their merchant network. They take as opposed to like a Visa card standard transaction, which is like 3% and 30 cents or something like that. BNPLs typically take double that, but they assume the risk also. So they're paying the merchants. So merchants are willing to pay a little bit more, sacrifice some margins, less exposure, and they get the cash right away. So and they increase customers. So as their merchant base grows, they increase transactions, increase fees that way. So their marketing spend, they're on the Timberwolves jerseys nowadays, you might notice, looks pretty good. But so yeah, they're marketing to new customers. But their primary driver of growth, like revenue grew at like 60%, I think. And customers grew at like 12%. So this is kind of the differentiator, is that what they're doing is focusing on transitioning. So they want to acquire new customers through merchants, through branding, through advertising, but they want to transition those customers to what they call mods, which is monthly and on-demand subscribers. So those are the people paying for the premium SEZL Anywhere or paying the high fees to use SEZL On Demand. And that's a much higher margin product for them. And then what they're doing is they're working to make the app itself and their product much more engaging. They have like financial literacy tools on there. They're starting to do rewards. So you can get cashback rewards. You can participate in like games that probably advertise to you that give you SEZL bucks back. And what they're finding is that, subscribers are spending using the product like 10 times as much as somebody who is just doing the pay in for at checkout. So that's their big growth right now.
Now, I want to mention that I like the business model of almost being a membership program, a subscription, similar to, at the end of the day, that's almost how American Express and the Chase credit card businesses are, where, yes, they have credit cards. And as you mentioned, it's all buy now, pay later. But the reality is people join these different payment methods for the perks they provide. And if SEZL can build that ecosystem, that feels like a smart way to go about it to try to differentiate themselves. But I want to talk about the growth picture. Looking back, let's say we're in the year 2030 or 5 years from now, however you want to describe it. Why would more people use SEZL? What causes them to gain market share, and just overall the competitive landscape, how you see it?
Yeah. So 2030, looking back, I think SEZL continues its transition from more. So here's the way I look at SEZL a little bit. It's more than just like pay in for at checkout. Like I said earlier, they're leaning to live in the consumer's wallet. So as we go to 2030, in my opinion, SEZL's primary growth is actually being more of a credit product itself, based in like pay in for, right? As an alternative to credit cards, rather than, and is focusing on consumers who have like high intention use of that. So rather than someone just going on to Amazon and being like, I want to buy this laptop. Oh, wow. It says I can pay in for, right? And caught my attention and caught me as a user that way. They're doing that with merchants, but the people that they're going to be most effective with as like a credit product are people who are looking for an alternative to traditional credit cards. And their largest user base is Gen Z and younger individuals. And all trends show that the fastest growing use of BNPL is younger Americans, right? So the way SEZL continues to grow, that generation continues to age. It becomes their primary means of using credit. As young people become more financially savvy and financially educated, they start to turn to like 0% BNPL more than they do credit cards. And today, like, one of the downsides of our kind of K-shaped economy is that student loans and stuff like that are weighing heavy on consumers and are adversely impacting traditional credit reporting, right? So because of economic environments or maybe initial irresponsible lending decisions, BNPL starts to become a point of access for like a cash bridge for consumers who are feeling the stress of like student loans coming back on after a period of being off. And whether they're being introduced to Sezzle that way or through advertising, the more people that get that become exposed to it, and the more that the conversation, like my point, becomes normalized, the more opportunity I think they have for growth.
All right, folks, before we move on, let's talk about our home for investment research, Fiscal AI. Fiscal AI is the complete stock research platform for fundamental investors. We use it every single day here at Chit Chat Stocks. It has everything you need to research individual companies, from 20 years of financial data to company-specific segments and KPIs, earnings call transcripts, Morningstar reports, and insider ownership data, and much, much more. And they just lowered the price of their highest tier by 60%. If you want a complete enterprise-grade financial data terminal, check out Fiscal AI. If you use our link, fiscal.ai/chitchat, you will automatically get 2 weeks of Fiscal Pro for free, no card required. And if you want to upgrade, our link will get you 15% off any paid plan. Again, that's fiscal.ai/chitchat. The link will be in the show notes.
All right, listeners, I want to take this time to remind you about the Emerging Moats Stock Research Service, a newsletter that will produce a stock research report every 4 weeks and regular updates on existing stocks in the Emerging Moats universe. We have an upcoming schedule, including a research report on Wix.com. We have Interactive Brokers, American Express, Nintendo, Airbnb, Nelnet, and much more. Please, if you want, reach out and get a complimentary free trial. You can do that by contacting me through the link in the show notes and giving me a DM on Substack. I hope you'll try out the service.
You mentioned that you tried it out because you were more interested as an investor. What was the experience like? Was it kind of everything you were expecting? Anything to note?
Yeah, it was actually cooler than I expected. So I didn't become a subscriber. I just did a standard pay in for just to test it out. But the app is actually much more than I expected. It's become like a shopping app. So the same way that you open up like, Uber and get hit with a bunch of, one of my favorites, when you get hit with a bunch of like, hey, you're searching for pizza, go to the gas station, go to this pizza shop and get a $9.99 pizza, or you get all these pop-ups. So the same thing happens in Sezzle. So when you open the app, it's like featured products. There's a whole bunch of stuff that's on sale that's targeted towards you. There's gas station deals, all the same type of stuff that you're seeing on Uber. So, cost-conscious shoppers also, like when you open the app, you can get a deal, right? So they're really encouraging people to become Sezzle first. Like, let me check Sezzle for a deal before I go on Amazon or before I Google it. And I thought it was really cool. They had a bunch of deals that I wasn't expecting laid out in front of me, but it was super easy to sign up for, super easy to use. I was impressed.
Is that advertising revenue for them as well, or are they just making money on the back end?
No, I think right now it's making money on the back end.
Makes sense. All right. Unless, Brett, maybe you have any more questions on the financial profile, I'd love to talk valuation. I guess you already kind of talked about management a bit. What does capital allocation look like today? What does the actual valuation? What's the this might be outdated by the time it comes out, because I think we're recording this about a week before we produce it, but I'm looking at like a $2 billion, roughly $2.6 billion market cap. How much do you think they could earn? Yeah, talk through any thoughts on the valuation.
Yep. So right now, I think that brings it to like a 14 or 15 forward PE. But EPS is almost doubling over the last year. It's got like a PEG of 0.6, so it's extremely fast growing. I think they guided for next year for a 29% year over year for EPS, which is growth that I'm happy with. It's toning down a little bit because they were growing so rapidly, but that's to be expected. So they did this year they also focused on a couple new products and stuff like that they pivoted off to because it wasn't transitioning to subscribers as much as they wanted to. So there was a little bit of spike in GMV and stuff this year as they were focused on the on-demand product. But Sezzle has shown, right, if they can keep up 25, 29% growth, and the reality is they increased guidance every quarter for the last 4 quarters, right? So they always start with an annual guidance. They go out and say this doesn't include any of our new products. And every single quarter for the last year, they've raised that guidance in as recently as last quarter. So, that's kind of the not expectation, but that's the stuff I like to see going forward. But I think, I think we're going to see a big quarter this year. There's tons of stats that show BNPL spending was a huge increase from prior year during the holiday season. The thing about Sezzle is that Q4 and Q1 get a little odd because of GAAP rules. They have to recognize provisions when they issue the credit in Q4, but it gets paid back in Q1. So Q1 typically sees the major revenue spike as a result of Q4 spending. But yeah, I mean, I love the CEO. Their ROE is like 100%. They're extremely focused on profitable growth. They, we're sitting at like a 14 forward PE. If we can get up to, we've seen that Sezzle can get to high growth multiples, right? But if we can get to like the average multiple that they've had, 23, 22-ish over the last few years, you're talking like a potential 30% CAGR for 5 years, right? Even if you that's assuming EPS can grow around 25% a year. But even if you slow that down and still stick them, slow it down by 10% a year and still slap them with like a 15 PE, you're still talking 15% returns as a base level with no multiple expansion. And with like a slight expansion, you can get up to 20-25% returns easy. So in my opinion, I think Sezzle is pretty primed right now. I think the big thing holding it down is a lot of the sentiment. And I think as they continue to execute through that and they continue to show their profitable growth, that they can experience a decent re-rate up and be a potential multi-bagger.
You mentioned that forward PE, and my instant thought was, oh, all right, well, yeah, well, stock-based compensation is probably a big headwind there. I just checked it. Pretty low share-based compensation, just 2% of revenue. So that forward PE is valuable metric to use here. I was assuming, younger tech company, it's probably going to be egregious, but no, it's pretty impressed by the limited share-based compensation there.
Yeah, and they just they got a buyback program going. They wrapped one up. So Charlie speaks. He says when we see our stocks undervalued, we're going to buy it back. He's 44% invested in the company. It's his prime net worth, has never sold a share. They've been growing at crazy rates. I'm not having unrealistic expectations that think, we're going to grow 100%, 70% year over year, every year. But I think that the BNPL market, TAM, has a lot of room left to run. I think it's still in a very young state of like acceptability, how we were talking. I think guys and people our age don't typically get introduced to BNPL that much. But I think as younger people get more introduced to credit, that they got a long runway ahead of them.
Okay, let's talk about risks to the business. We had some questions from Twitter, and clearly when they're a lending business, I think all of them are around things including late fees, increased credit losses. I'm not sure what RLTC margin is, but it compressed and someone is concerned about it, and then tail risk in a market meltdown. I think in general, it's like, okay, what happens in a recession? What do you think that risk is, and what could go wrong with Sezzle as an investment?
Yeah, so recession for sure is the primary risk. Like any business in a recession, they'd feel a huge tightening up from the consumer, and there for sure would be an increase in defaults as they're targeted towards near prime and subprime users. Um, but I currently feel like a lot of that's baked in. I keep hearing about the recession that has yet to come. And I think that's a lot of why the price has traded down so much. But, not to say that recession isn't a risk. It is. One way or another, it would decrease spending. But I do think Sezzle is positioned on a good loss prevention style of product, because their loans are like 4 to 6 week long, and they're typically less than $150. So they have the ability to tighten up very fast, right? As soon as someone doesn't pay, it's paused. They have no further access. They have rapid turnarounds. So there's been a couple CFPB reports, Consumer Finance Protection Bureau reports. There's one in 22 that I have a couple posts on, and one just came out in December. And both reports found that BNPL had a much lower financial burden on the consumer than traditional credit, but also that BNPL defaults were half of that of traditional credit, and that the primary risk of defaults or non-payment wasn't people not paying back their BNPL. It was people not paying back their traditional loans and continuing to use BNPL. So for numerous factors, one being, getting into a bad auto loan that you can't afford is a decision that has a lot of implications to it and is, 5 years or more long. So consumers tend to, do I want to pay off this $25 payment 4 times on Sezzle and maintain access to BNPL? Or do I want to throw cash into the incinerator on this loan that I'm not going to be able to pay back anyways? If I'm tight on money, do I want to pay back my student loan? Or do I want to ensure that I have cash access to bridge me between paychecks, pay off their BNPL? And Sezzle is actually, I feel like, in this unique position where like they do well in a like tight consumer economy, because people are leaning on them as like a cash bridge more, right? They're leaning on access to credit. But they also do well in like a booming economy too, because there's more GMV, there's more stuff being purchased, right? So they're kind of uniquely positioned to like benefit from both scenarios. But undoubtedly a recession would pause spending. It might not result in like heavy losses, but it would result in less revenue and less GMV and take rate. Also, there's always regulatory risks. Like I said, though, there's a couple reports that lean favorably to BNPL. There's some stuff about like disclosures and stuff that they think should be more transparent, but you never know what's going to come up, like the 10% credit card cap. So regulations are always a risk.
Is 10% credit card cap not like, would that not be extremely bullish for buy now, pay later providers? It feels like people would have to turn somewhere if they're not being extended credit by their credit card providers.
Yeah. I mean, that's my opinion, right? I mean, I don't think that in reality can or will happen, but if it does, banks have already said like 50% of our lowest credit score consumers are going to be dropped from credit. And for better or worse, America lives on credit, right? So the place to turn is BNPL, and it's got 0% interest. It's not under the scrutiny that's catching the administration's eye with the 27% interest rates on credit cards and stuff like that. So, in my opinion, if it went through, it'd be extremely beneficial for Sezzle and BNPL in general.
Okay, I think we're kind of hitting our last couple questions here.
Mm-hmm.
What would you say is one thing investors get wrong about Sezzle? I will personally admit the name was a bit of a deterrent for me, but that's kind of beside the point.
Yeah. So let me loop back real quick. You mentioned like RLTC and late fees and stuff like that. The reality is that's part of credit business. That's part of BNPL business. There has been an uptick in provisions, which is compressing margins, but they went up to like 3.1. They started the year in the mid-single, 1.5-ish. They're still within the lower end of their annual range. And it was mainly because they were onboarding a lot of new customers with Sezzle On Demand. And when you rapidly onboard, you have higher provisions initially. I'm also not the biggest, I don't hate conservative provisions as much as some people do. Sezzle, with like the exception of one quarter, I think over the last 2 years, has never exceeded their provision rate in actual losses. And where they do over a provision, it comes back in less provisions further down the line, right? And then late fees, part of that is Sezzle's product as well, is they give you the opportunity to reschedule a payment for a high margin late fee on their end. So maybe not be the greatest sign for consumer health, but Sezzle has repeated that they're not seeing extreme weakness. So that's just some extra stuff that you mentioned came up on Twitter. But what I think most investors get wrong with Sezzle is, they don't know what it is. But two, that it's just your run-of-the-mill BNPL, and that it's for subprime people who can't get access to credit, and they're using it because they're leaning on debt to survive, and they're extra risky, right? So, like I said, they're short-term loans. They're low value loans. They're $150. They last 6 weeks. People prioritize that over larger payment burdens. But the reality is, the way I look at Sezzle is that it's more of a reverse budgeting, like financial tool. They have low customer acquisition costs because their main target is transitioning new users and existing users into premium subscribers, which just flows right to the bottom line. Lots of people say like, oh, I've heard plenty of times, you could just go on BNPL, buy something and never pay it back with no impact to your credit score. So a lot of people do report on Sezzle to credit voluntarily, but either way, you can't just true and screw, right? Sezzle sells your loan, your defaulted loan, to collections, and collections reserves the right to report you to credit. So there is negative consequences. And on their actual losses, Sezzle has like a 15% recovery rate. So they often do get a chunk of the money back. But like I said, everyone hears the main things people get wrong. They hear subprime, non-FICO scoring, buy now, pay later. They're like, see you later. And I think that's an incorrect assumption. I think people inherently think buy now, pay later is extremely negative, that people are looking at it as like it's an additional debt burden. As I said at the beginning, I think that's the wrong perspective to have. Not that there's not people who are leaning on it that way, but I actually think that Sezzle is in the position to become, a new go-to wallet product to provide individuals like with responsible access to credit and an opportunity to build their credit scores.
All right, Marc, thank you for all of the color on today's episode. Thank you for talking to us about Sezzle today. For any of the listeners that are more interested in your work, I know you cover Uber, You cover many other stocks. You even had the general himself, Bill Ackman, give you a retweet and share on your Uber thoughts, which have been quite thorough, I would say. But again, I'm going long here. Where can people find you? And we'll make sure to put all those in the show notes.
Yep. So you can find me on, my main platform is Substack. Just search Manu Invests or Fundamentally Sound. It's manuinvests.substack.com. Tons of free content, more content for premium subscribers. I'm also pretty active on X at Manu Invests.
All right. Thank you, listener, for joining today. As a disclosure, we are not financial advisors. Anything we say on the show is not formal advice or recommendation. Ryan and I or any podcast guest may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, once again for tuning in. And thank you, Marc. We'll see you next time.